What's going on, everyone? Terry Julian here, back again with another video. And folks, you're gonna like this trade. Up to 30% return on investment, high probability trade. I think you're gonna love this setup. Visit my course, mastertrendsystem.com. If you don't know anything about debit spreads or trading at all, let me know what you think about this particular trade. If you want me to discuss any other stock that you're talking about right now and thinking about, leave it in the comments. Anything, leave it in the comments. It's your boy, Terry Julian. Check this out. All right, ladies and gentlemen, so let's go ahead and take a look at the chart. MRVL is the ticker. As you can see, it has sold off into this congested area here. We might have 1 or 2 more days of red. I don't think it's going to be very strong red, but I think we're going to hang out in this area here for a considerable amount of time. And that's why I want to take advantage of this volatility and make some money right here. So first, let's go ahead and learn a little bit about the stock, MRVL Technology. The company describes itself as a key player in the semiconductor industry with exposure to data centers, cloud computing, automotive, and wireless communication. Do your research, but they clearly do have quite a bit of exposure to cloud computing, and that's why I want to consider this an AI theme. And it's one of the reasons why the stock ran up initially into the high 80s, eventually then selling off because of poor performance on the automotive side after the earnings announcement. So it's exactly where I want it to be. Let's go ahead and go into the hourly chart and set up our support and resistance areas. So as we know here, that's our recent high, some support down there. Okay, a little bit of resistance initially at 73. All right, 55, and we don't want to go down too low, but that's pretty much where we're going to be at. All right, so we do our support and resistance in the hourly, move it to the daily, and as you can see here, makes a lot of sense for us, doesn't it? All right, so let's go ahead and zoom in here and start putting our trade together. So what are we doing here? We're going to identify the trend, confirm the trend, identify a safe entry point, and then we're going to take a deep in the money trade. We're going to do what's called a commit to safety trade. If you don't know what that is, please take a look at my course at mastertrendsystem.com. So we're going to identify the trend here. Let's go to the monthly chart, and we use the 10 moving average to identify whether or not the stock is going up or down. As you can see here, it's well above the 10-month moving average. So we would say that this is a stock that has been bullish and had been bullish. As you can see here, 1, 2, 3, 4, 5 months in a row before earnings. This is the reason why I want to take this trade. This is a stock that is going up, suffering from a little bit of hesitation right now, but it will continue to go up eventually in time. So let's go ahead and go to the daily chart. Let's make sure that in the daily time frame, we're still got a stock that's doing very well, right? Here's the 50 and 100 moving average. As you can see, the stock is still doing well above the 50 and 100 moving average. And in fact, when it pulls back to the 50 moving average, that's actually been a time to purchase this stock, right? To put some capital at risk. So let's go ahead now and get rid of those, and we are going to identify whether or not we're in a buy zone for this stock. So we're going to use the Keltner channels for that, right? And we want to be in the Keltner channels. We want to be above it. We don't want to be below it. We want to be right in it. And as you can see here, MRVL is right in the Keltner channel buy zone. So that's exactly where we want to be. And now with that being said, we want to take the kind of trade that gives us significant amount of protection to the downside. So even if the stock goes down, we still make money on this trade. And I've got a trade for you that I think you're going to be really interested in here. Let's put it all together here. Okay. So with that being said, let's get down and dirty. So we've got the trade right now on the screen. We're going to sell the $60 call, buy the $55 call, both for June 21st. We're going to be risking $390 to make $110. This is a high probability trade, risking 4 for 1 here. I can't guarantee you're going to win this trade, but I'm willing to say, compared to all of my most recent trades, you're going to be making a considerable amount of money on this trade, because we're not even going to sit around all 100 days that's left in this position, okay? We're going to only be sitting around for 30 to 35 days, and we're still going to get 50 to 60% of max gain, right? I need you to imagine being able every single month to make $7,000 to $15,000 every month, because you're doing a snowball effect when it comes to your trading. Getting out of these trades month after month after month, allowing you to make 50% of max gain, and then setting up another trade, another trade, another trade, and your account growing for you to be able to make large trades, get out at 50% max profit, and then right into another one, right? The problem is that so many of my students don't stick with the plan long enough to be able to fulfill the destiny of what the program eventually Alexio allows you to do, which is generate financial freedom for you and your family, right? You just need to stick with it long enough. Here's the thing. We sold the 60, we sold the $55 call. Our break even, let's go ahead and take a look at where our break even would be if we were to do this trade. Okay, let's go ahead to the chart right now. Again, selling the 60, buying the $55 call. Our break even is what, 58.88. All right, 58.88, 58.90 is okay. It's fluctuating a little bit, but it's going to be underneath 58, $59. Okay, so let's get back to the charts here. Okay, so 58.90 is our break even. So 58.90 is right about here. Okay. That is where the stock needs to stay above in order for us to make money on this trade. So the stock could go down for the next 3 days. Okay. The stock could go down for the next 3 days, but as long as it stays above this area, which, above our resistance to support area, which makes me very comfortable. Obviously, I would love to see it go up. If it goes up, we make even more money even faster, right? It's doing a good job right now because it's actually hanging above the previous day's low, which is great. But we're going to be making money even if it goes down. Even if it goes sideways, we still make money. That is why these debit spreads, these high probability debit spreads, are how family houses, institutions, banks all around the world trade. Selling these buying these high probability spreads on trades that just make sense, and they don't even have to sit in these trades until expiration. We can sit in this for about 30 to 35 days, generate about 40 to 50% of max profit, and then move into the next trade. Okay. If those of you guys who are using a broker like Robinhood, you can do this on Robinhood. You can do this on any other free broker out there, and you're not even, you know, expending any capital in terms of fees. It's a smart and capable way of trade. You can learn more at my website, mastertrendsystem.com. So let's go ahead and end it by showing you guys again what's at risk here. So again, we're selling the $60 call to buy the $55 call for June 1st, June 21st. We're risking $390 to make $110. So I hope you've learned a lot here. This is a trade we're going to look back from now in about 30 to 35 days. Look back at some of my other trades. Let me know, did they work or not? Okay. I'm going to go out on a limb and say I'm pretty good at what I do. It's your boy, Terry Julian. I'm out. Trade well.